I'm very glad to be here with John Ho today. John and I caught up a few times and we thought we like to talk about fintech, and so we wanted to invite you to join us, and you're more than welcome to ask any question that you might have and we'll try to answer it. Otherwise, we'll take it into the next session. We have prepared a couple of topics on central bank digital currencies. We can take a regional view as well. John is based in Singapore, I'm based in Tokyo, and we're following what's going on around the globe quite extensively. So with that, John, I'll ask you to introduce yourself briefly, if you don't mind.
Thank you. Thanks, Norbert. Thanks for having me and on this sort of Tokyo FinTech webinar. Glad to be here. And as Norbert knows, we've been chatting about fintech and topics, and we have common interests to talk about today. We want to talk about digital currencies. So before that, just want to explain that I obviously the opinions and things I express are my own. That doesn't necessarily represent the firm that I work with. And I'm very glad to be here. And just a couple of I know in the audience today, we do have English-speaking audience as well as those that are based in Japan. I used to live there for a number of years. And just a couple of greetings to some of my friends who will be dialing in. So, konnichiwa, watashi wa John to moshimasu. Dojo yoroshiku onegai shimasu. So happy to start the presentation proper. Safe to say earlier that in the context of COVID, the policymakers, central banks now are obviously trying to accelerate the sort of POC pilots in plans in terms of enabling a framework to issue central bank digital currency for all the reasons I've set out about, and Norbert have set out about decreased cash usage, fear of transmission, the cost of maintaining ATM machines, the inefficient manner in which payment is being handled. So I think, what is CBDC, right? So CBDC is very different from your cryptocurrencies that are not backed by a central authority. In the context of CBDC, in a nutshell, it is a new form of money issued by a central bank, and it will be taken and will be treated as a legal tender in the country in which it is intended to be used. So then you ask, so why do you need to experiment with CBDCs? For the reasons I've just mentioned, reduce demand for cash as a trend, as a global trend, to also counteract against the growing usage on cryptocurrencies, because the regulators are concerned that although cryptocurrencies may have its own use cases in other contexts, the central bank monetary policy in their role in monetary policy, financial stability is key. So the CBDC is to counteract and provide a sort of a viable alternative to consumers and citizens, that you do have a form of currency that's not just in banknotes, coins, or bank account, but also in your wallet, your e-wallet. So financial inclusion, as Norbert had mentioned, they'll also expand the accessibility of a country regulatory currency to the extent that it's used not just internally, but also externally. So if you look at CBDCs, it's not a one-size-fits-all. The thing we want to talk about later in the design is there are two main types of CBDCs, obviously, that before I move on to other hybrids, is you have a wholesale and retail. So what do I mean by that? So wholesale are CBDCs that are used for interbank payment and security transactions. So when we talk about retail and general purpose CBDCs, these are CDCs by definition used by the members of the public, typically as a means for payment. Then you have hybrid structures that do have a combination of these two concepts, or concepts that combine both wholesale use as well as retail use. But having said that, one thing to bear in mind that a lot of these CBDCs projects are still in various stages of proof of concepts, piloting. As far as we're aware, there have not been any real cases yet, but some countries are more advanced than others, which we'll go through in a couple of slides. But for this purpose of this slide, just want to make sure that the rationale of what a CBDC is vis-a-vis cryptocurrencies, and the difference between, when a bank or a central bank were to thinking of issuing a CBDC, there are obviously fundamental questions to be considered. For example, why are they considering CBDC? What is the purpose? Is it for retail or is it for wholesale? And what is the problem statement they want to solve? Because it's not a one-size-fits-all approach. Different countries have different pressure points, problems. And then the regulators also look at, in addition to just the benefits, what are the risks? Is there a risk of creating a disintermediation on banks? If people feel more comfortable placing money with the central bank directly, does it mean we still need banks? And what does it mean in terms of banks that want to attract deposits for lending, for financial activities? Does it mean that will also crowd out the space where they have competitors now in terms of attract deposits? And in the worst case scenario, when you have a bank run, will people then take the money out from banks and park it with central banks? So these are fundamental considerations that central banks are considering at this stage. Safe to say they are obviously looking at worst case scenario, but it's good that regulators are thinking about the pros and the cons, because the more this data and consideration are factored in, and hopefully the design of the CBDC, to the extent that we see light at the end of the day in terms of actual issuance, scenarios in terms of upside and downside are well considered, and with contingency planning that hopes to sort of mitigate any shock to the system. That certainly is being discussed, not just at the country level, but also at the international level among key regulators and central banks. So Norbert, I'll just pause here, see whether you want to add to anything from your experience.
Yeah. I think I can do comments on the next page probably.
Sure.
So we've done here, there was a speech by Andrew Bailey, who's governor of the Bank of England, at the beginning of the month at the Brookings institutions. And that was a 9 or 10 page type of speech. And there were just a few sound bites in there that found compelling, because obviously Mr. Bailey is not speaking on behalf of all the central banks, but it represents a view on where we are in terms of central bank digital currency. And this, as John said, we'll go through the individual central banks and all the pilots that are going on in just a few slides. And there are the differences when certain central banks have started and where they are in the process. But in the first paragraph here, what the governor is saying, right, there's a few characteristics of money that are important to keep in mind. And of course, he's got a British pound sterling view. And so it needs to be a sterling denomination. It needs to be convertible into fiat money at par, and it needs to be convertible on demand. And I find this interesting for a number of reasons. To start with, simply because we're moving into a society already, when we're moving cashless, that cash is actually at a premium, because cash is the only method of payment that's still truly anonymized. I think there's an abundance of companies that tracking various digital assets, cryptocurrencies, and even some of the privacy coins like Zcash, Monero can be tracked these days. So there are interesting cases where people actually pay you a premium if you can give them non-traceable cash, which means, right, you can't have $1 million in sequential numbers. But let's say, for example, the $20, $50 that people spend on buying drugs at the street corner have, for certain and sometimes illicit purposes, a much higher value than the value that's printed on them. And these scenarios exist, and it exists especially when you try to shift money around. So that is no different than if you look at the quotation for DAI, which is the MakerDAO issued stablecoin right now, you probably find that it's quoted at 1.01 or 02 US dollars. So for some reason, right, it's not fully tagged and packed into par. So Mr. Bailey went on and talked about different innovation vectors, and he mentioned three. So one is crypto assets, and he mentioned Bitcoin, and dismissed it simply as a payment instrument because the volatility in value is too high, in his opinion. So I'm just quoting that. Right, you might have a different view on that, but it is what it is. The second point is that especially in Europe, you have e-money licenses, and most of the new fintechs actually have an e-money license. They don't have a banking license, and there are big differences in that are probably not necessarily on the consciousness of the general public. And if you have an e-money license, right, while there are certain criteria, the standards are lower. There's no depositor protection scheme, limited capital and liquidity requirements, and there's no resolution scheme, right? Which means that if a company like Revolut goes belly up, for example, good luck trying to get to your money, right? While for better or worse, and right, Lehman was before all these resolution schemes have been put into place. It took like for ages for certain claims to be settled and for people to get their money out. Now with what we have, in some cases, ring fencing and resolution regimes, that's much easier. And then there's this thing called stablecoins, and if you want to simplify it, is CBDCs is nothing else than a government-issued stablecoin. Now, there are many different views on that. Naturally, I think one of the things, and I want to address partly maybe Russell's comment with that as well, especially if you look at the US, if you look at some of the stable coins that are going around, like a USDC versus Circle or the Paxos dollar, they actually, and that's the prime reason that they've actually been allowed to grow to this volume that they have today. They have a backdoor, and you can actually see the backdoor. You can look at the code, right? It's open source code, so they can be, your assets can be frozen by government edicts. So if the FBI is after you for some reason, they want to freeze your assets, they can freeze your stable coins there as well. So it's not like people always pointing to China, and we want to talk about China DCEP quite a bit, but the fact is that in the Western world, most of the stable coins you have this legal backdoor. Libra always comes up in the discussion, and again here, I think Bailey's point of view is pretty practical, saying before you come with a basket of currencies, which was the initial design that Libra had, the first step needs to be a single currency stablecoin. Now, I think what becomes interesting again is the jurisdiction, right? So when you say that a stablecoin, you can obviously run in one jurisdiction. So assume you ever incorporate a company, and we still believe that there is, right, some central institution or so that has to have the hand on the switch in some shape or form. You can obviously run this from anywhere. You can denominate it in a currency of your choice, and the people, whoever and wherever they are, can use it. And that's a problem because regulators today are still based on the nation state, right? Unless they represent the European Union. And so the concept of a nation state border is where the jurisdiction ends. And we already in the traditional capital markets are in a holy mess as far as extraterritorial regimes go. And John can certainly talk about that at length as well. Right, the Americans trying to reach out, the Europeans, and now the Japanese certainly try to do the same. And that's not healthy. And so you can't uninvent the technology. The technology is there. People will continue the development of the technology, and whether it's currencies or it's actually, let's look at synthetic assets, right? There are things like a synthetic US dollar out there. They are not backed by anything. So we're not talking about a stable coin that's actually backed by a physical US dollar like Tether would be, or Tether claims to be. It is just a construct that says this is a US dollar, and the system is like you can arbitrage around it, and if the price goes out of whack, people would do the arbitrage transactions to bring it back in line, but it doesn't have anything. And so in the same way you can create a synthetic dollar, you can create a synthetic Apple stock, for example, and even then, it's like we'll have to question, how do you regulate this, right? And so I think the regulators don't realize how far the technology has come still, and the technology just develops faster and faster. So that is my blurb on that. Oops, sorry, one too far.
Yep. Just to touch on the benefits, I've earlier mentioned about some of the benefits in terms of improving efficiency, demand for central bank money, financial inclusion, and then also to reduce counterparty risk, because if your counterparty in a central bank digital currency is not your private entity, a bank or a service provider, because if you hold a central bank digital currency in an e-wallet, you are facing directly the central bank, who's the counterparty. So you remove what we call normally your counterparty and risk in a context. But earlier we did mention that the impact of CBDC, given that it's so novel and new, there are obviously impact on interest rate, as earlier Russell have also touched on about the negative interest rate environment. What does it mean towards financial intermediation, financial resilience, and also the technology, right? So for a number of you who are involved in this from a tech perspective, it's one thing doing proof of concepts, another thing doing blockchain peer-to-peer, crypto payments. But when we look at the real world of doing CBDCs, it's about connecting the payment rails with the blockchain, and also ensuring the issue in terms of performance, speed, scalability, the interoperability, because different blockchain have using different networks. Then you have risk of cyber attacks, data protection, what data needs to be stored on chain, what data needs to be stored off chain. And if a number of you have been involved in this sort of crypto exchanges, one of the things we have to grapple with is travel rule, right? So the implications, how do you comply with travel rule, doesn't go away. So you might ask, will the travel rule apply to CBDCs? So that question was bubbling around for a while, but the FATF, which is the body setting the rules globally for AML and KYC standards, just last month published a report that takes the position that while CBDCs are not crypto assets, however, for purposes of AML or KYC, they will be subject to the same KYC and AML standards as if you're transmitting money. So if you look at today, if you go to a bank and transmit money, you probably have to identify who's the sender, who's your beneficiary, and where is it going to. If the amount is of a certain amount, your bank will say, you got to state what is the purpose for which you're making payments. So that standards will equally apply to CBDC. And obviously FATF are not sort of the national body setting standards, but what they say in global guidance does have persuasive influence on central banks and national bodies, because typically they will adopt those principles and transpose to local laws, right? The other thing we also look at CBDCs in many countries is what is the legal framework. Like in Japan, I'm aware of, if they want to issue central bank digital currencies, it also require a relook into the legal system. So there was a survey done last year, or rather a report is on the Bank of Japan public website, where they analyze the potential merit of issuing CBDCs. And there was a specific paper that looked at the legal system in a rather regulatory framework in Japan, that in order for these to go live, beyond just other consideration like tax, monetary consideration, just looking at the legal and regulatory framework, that has to come into play as well before it is sort of ready for issuance, because you need to understand that the digital currencies you hold in your wallet, whether it's in your offline wallet or it is in your hot wallet or even in your e-wallet, needs to be recognized universally as money, as legal tender. So I think that's a key element as well. Nobody, you want to add anything to it?
Yeah, that's right. So I think under Japanese law, legal tender is really only Bank of Japan issued banknotes and coins. So as John said, if you actually want to create something digital as a sovereign currency, you need to change regulation around that, which might, whatever it is, Bank of Japan law, it might impact property law, it might impact administrative guidance, etc. And that is fundamentally different than maybe some of the cases that we'll look at again in a second, where like in the Caribbean, I think the argument was that the digital representation that you have when they ran the pilot is actually just a digital representation of the banknote. And you wouldn't be able to make that argument here in Japan. What you can do, though, if you have a banking license, right, any bank can create a digital money. And so you have actually, if the J coin, it comes out of Mizuho with a federation of regional banks. You have the MUFJ coin, which in a way is maybe less domestically focused. It's more like the JPM coin that come. And so the rules on that side are pretty clear for now, but for the sovereign to actually issue a digital currency, there would be quite some effort required in rewriting parts of the law. Shall I skip on?
Yep. So one of the things we look at from a design perspective in terms of central bank digital currency, this is a sort of a pyramid that is very useful in terms of consideration. How do we what are the design choices for CBDC? So the way to look at it is, on your left-hand column, these are what we call basic consumer needs. And then your right-hand column, these are what we call CBDC designs. So the way the Bank of International Settlements crafted this early this year is to look at, just take for example, for the consumer needs on the bottom rung, the left-hand side, do you want convenience or do you want sort of cash-like peer-to-peer functionality? Because depending on the questions that you raise and the answers then would dictate the choices that central bank would decide in terms of the architecture. Similarly, in the context, if we move up the sort of food chain here in this chart, looking at the consumer needs, do we want resilience and robust operations? Then it's a trade-off. Do we use DLT that still in its, I would say, emerging stage in terms of maturity, compared to your actual payment rails that are robust, secure, and faster, cheaper right now? Or do we want to invest for the future? Because the technology is moving very fast, that speed, scalability on DLTs is obviously improving, right? Then you look at the left-hand column, accessibility. Do you want the CBDC to be accessible to all? If so, what are the considerations? Do you use account or token-based? The problem with token-based, I think the Bank of Japan have considered in their paper is, what about the rural areas where you don't have electricity? And in Japan, as we know, we do have power outages because of typhoons, because of earthquake. And when you hold money, right, in times of difficulty, if you go to a shop or a grocery store, you can pay. But if you're gonna have a situation where your money is tied to the fact that you need to have access to Wi-Fi, access to this, the question is, what if there are no power outages? Does it mean you can't access money? So there is a concept that's floated around with the Bank of Japan, is to ensure what is termed as universal access. So meaning it is an offline wallet, meaning that the fact that if you go to a store, they can actually swipe either using a QR code or any other technology that they name a technology that is developing, that you can enable digital payments to be made even though you don't have access to Wi-Fi. So that is obviously still being explored. So it's key. When you do CBDC, you don't want, by very definition, exclude people who are less tech savvy, right? Not everyone holds a mobile phone. You know, a lot of people who are beyond a certain age, I'm not saying that they're not tech savvy, but as a class, they will prefer simplicity, right? So rather than all kinds of funky gadgets. So I think these are very real consideration from policymakers to say, you know, what do we want? And account-based, token-based, we can talk about it later about the China DCEP. As far as I'm aware, the current view of the China DCEP is not largely based on DLT. There is some DLT back infrastructure, but it's very much still reliant on your payment rails, your account-based technology as well, which is proven itself. Because if you look at today, right, when we linked our digital wallet or mobile phone, whether it's an iPhone or Android, it's linked to a payment rails, to a credit card, to a bank account where monies could be deducted. And Norbert say some of them are in the form of e-money. The convenience is there. But the difference between central bank digital currency is you are actually holding real cash in a digital form, either in your e-wallet, whether you have a service provider that holds hot wallet, or sometimes your cold and offline wallet, right? The other thing the central banks are also looking at from a design perspective is it just for domestic payment scheme? What about cross-border? I think if you look at a lot of countries, that developed countries, the domestic payment is very advanced because you do have, we can touch on digital payments, you know, you have challenger banks, you have, as Norbert mentioned, traditional banks that now offer, you know, your app to make payment. But I think the friction lies with cross-border payments, which we all know, it's one, is expensive, two, is slow. Third, it doesn't operate on a 24/7, right? Imagine if you want to transfer high value payment cross-border on a weekend, especially on a bank holiday, it's very difficult. You don't even know till T+2 or 3 sometimes whether payment has been made or secure or confirmed, right? So these are obviously real situation where a number of central banks are looking at. So these are not exhaustive, but this forms the basic sort of trade-off. Do I consider consumer needs? If all the consideration on the left column have to be met, that will also drive the type of CBDC design, because it has to meet a resilience, robustness, not just from a tech perspective, ensuring that no one is left out from a financial inclusion perspective. So you could have a lot of high tech, but if most people who are obviously who are less tech savvy are not able to use it, by its very nature, you're excluding a class of people that you should include. So these are things that the BOJ in Japan in particular, in their white paper, have actually carefully considered. And they are also now have just formed a committee to actually pursue this, to look at, if we want to do this, one, what does it look like? What are the risks we're running? Are we leaving out anyone? And if we want to pursue it, what sort of design we're looking at in this case? So obviously we can go on, but I think I just want to give you a sort of an overview in terms of, from a policy perspective, what policymakers are thinking at this stage. No, but I maybe happy for you to add on to any of the things we just said.
That was perfect, thank you.
Yep. So then we move on in terms of what are the key projects we're talking about, right? These are all not exhaustive, because as we speak, 2/3 of a central bank around the world are either thinking or considering some form of a proof of concept, pilot projects, or even deals in terms of looking at CBDCs. Some are collaborating on a cross-border basis. Some are doing their own solos. Let me pick up a few examples. For example, in the context of Europe, you have the Banque de France that are looking at wholesale CBDC. They've just trialed a wholesale CBDC in terms of interbank payment to settle a security token in the context of a trial project involving Société Générale in Banque de France, which is the Central Bank of France. So they've proven it works in terms of the trial. In the context of Riksbank, e-krona, they're looking at more in the retail space. So they're obviously doing a pilot project as we speak. Now, in the region in Europe, Bank of England have also just concluded its white paper and consult in terms of looking at certain CBD design. So the consultation, which is a good report, I would encourage you to read. It talks about is in relation to China. So China is something that everyone is watching very closely. In China, as we know, based on what we know to date, is China has trialed the e-yuan, they call it, which is their national currency, or e-renminbi, with a number of financial institutions. They have trialed in 4 cities at the moment in China, and they have tested the hypothesis whether payment could be made using your wallet and also for a specific purpose. So the trial in the context of making payments for micro payments, they've trialed it in the context of transportations, in the context of e-commerce. And I think based on the current first phase, the results are pretty encouraging. There are obviously been leaked pictures of UI UX interface of certain central banks that are trialing the central bank digital currencies, how they look like. It's very much similar to, at the moment, to some features that we commonly see in WeChat and Alipay. But the difference here is WeChat and Alipay are in a combination of e-money or you attach your credit card. But here, the difference is you're holding a currency held in the digital form. So it's pretty interesting. We feel that obviously looking at information that is made public, that China is pretty much advanced. They're already in a trial period. They're expanding. Just about 2 weeks ago, they have expanded their tests beyond 4 cities. They are now looking at Greater Bay Area, Hong Kong, Macau, Beijing, to expand. So not only are they expanding in scope and expanding in remit, they are also expanding in terms of the number of tests and use cases they have. So obviously this is a space to watch because it does have the hallmarks of changing how a global payment system works. Now in the US, there is a project run by a consortium of private sectors looking at digital dollar project. So the digital dollar project is a project being kicked off to look at the merits of issuing a US dollar-based CBDC. As some of you might be aware, the Federal Reserve just about less than 2 weeks ago have made an announcement that they have appointed MIT to work with the Federal Reserve Bank of Boston to work on a test case, a use case in terms of the issuance of digital dollar. So it's pretty interesting that if you look at the speech from Jerome Powell in December, where he was asked as part of FOMC discussion whether US would consider CBDC, he sort of hedged his bet saying, look, we are studying about it. There are no immediate plans for us to do anything because we are talking to collaborating with other international central banks. Fast forward 8 months from now, the Fed now is saying, there's no immediate plans, but however, we are moving ahead, working with tech vendors, working with institutions of higher learning to now see how does CBDC work in a test environment. So to me, that's a step in forward, because for the first time, they are now putting words into action. So I think that's critical. Why is critical? As you know, US dollar is still the reserve currency of the world. If you look at cross-border payments, e-commerce, global markets, the survey done recently by BIS is US still commands a predominant share of global markets and payment system. So that's not going to go away. And one of the sort of objective of having digital dollars to preserve the use cases in the US dollar world currency status, because if they do not adapt using CBDCs where the whole world is going digital, the concern would be there will be less attraction to hold the dollars if the world is going towards a digital payment mode rather than just based on banknotes and existing payment rails. So obviously what I show is a snapshot of a number of projects. As we know, there are many projects being run right now in different stages of maturity. Safe to say that we have not seen a real life issuance yet doesn't mean that it will not happen. My personal view is not a question of whether there would be a CBDC. I think the direction of travel is there's likely to be a CBDC in the next 3 to 5 years. The question is what form or shape that you will take. It's not a question of if, it's a question of when. So Norbert, on that note, maybe, I don't know what you want to add in terms of where you see it from your perspective as well.
Yeah, I mean, I find 3 experiments fascinating, and let's start in the West maybe. So I think the e-kroner is just fascinating simply because the Nordics overall are so much advanced in terms of being a cashless society already. So it's like 5 or 6% of all consumer transactions are done with cash. That's all, while like Japan is still at the 76% rate or so, right? And so you're already largely cashless and people are used to it. So you create other issues that John addressed already, right? With other people out there who are actually excluded from the financial system because everything is digital. But in terms of environment that's mature enough to actually deploy a digital currency, Sweden seems ripe for it, and they're not part of the euro, right? So it's a fairly small and manageable country, let's say, to actually do that, and so it will be interesting to watch. I'm pretty excited about this. They are using R3 Corridor as the infrastructure, I believe. The second I'm fascinated about is China, of course, and the third one will come on the next slide. This is sharing a bit for the home team, but China fascinating for 2 reasons. One is, and I'll take the Chinese view of what John presented as the US dollar dominance. Obviously, the post-World War II economic environment has been a dollar-denominated one, and if you are a nation state, then you might consider that not a necessarily good thing. Because you're obviously subject to another currency's central bank and monetary policy, you're subject to extraterritoriality, right, as we know, with US sanctions, etc. So if you look at the likes of China, Russia, Iran, then there's a natural national interest in trying to weaken the US dollar position and or create an alternative payment mechanism that doesn't go through the US rails, so it's outside of the US grip. And I can understand, right, where they're coming from, and I find it interesting to follow from that perspective. And I think the cross-border payments perspective, clearly the Chinese DCEP kind of rolls into the Belt and Roads Initiative. So once you have it working nationally, there's no reason if really the Belt and Road Initiative becomes your economic network as well to actually allow it in a cross-border use, and in that way actually replace the US dollar. And that is, it's not a pipe dream, I'm not making this up. So if you actually look at some of the reporting that has been done on the recent Iran and China oil deal, right? The payment terms are such that actually the Chinese can pay with pretty weak African currencies. So that's what I've read. Do your own research, but there's a payment method in non-US dollar in there. The second reason I find this interesting for China is that I have an inherent distrust of any statistics that come out of China. And part of that is having grown up as a German when we still had the war. The numbers that came out of Eastern Germany at the time weren't actually that bad. But when the wall came down, it was a pretty dreadful state of the economy. And so China has been pretty consistent in hitting their GDP targets, and right, if you are somewhere in the regions in China, you better make sure that you hit your targets and at least report the targets, because otherwise you might no longer be in your job. So the incentives are not necessarily aligned with the truth, and I totally see a digital currency also as a mechanism to get a true picture of the real economic activity that's going on in the country, right? If everything is done digitally and it's on the central bank server as it is planned, then you basically have a real-time view in the economy, which is data that any economist would dream of. The third component around China is, of course, the Alipay, WeChat Pay dominance, and we've got like Alipay 53% of the digital payment markets, WeChat Pay 40%, and the rest is 7% or so. And this hasn't started with a central bank issued digital currency. So originally, when these payment mechanisms were created, they were, of course, there to enable the e-commerce on those platforms. But since 2018, they actually created a new clearance system that runs in parallel to UnionPay, which is the RTGS, or the real-time gross settlement for commercial bank systems payments in China. And so the regulator, the Bank of China, has forced the e-money providers, let's call them that way, onto the central clearing platform. I think that was the first step in reining this in. And the last indication maybe is that I think we're all expecting and watching with some interest the pending IPO for Ant Financial, which actually is no longer Ant Financial, right? It's Ant Group. And there seems to be a certain nudge of, let's say, the government behind this as well, to say, actually, we don't want you to be the dominant financial group in China. You can be a tech provider to the financial services industry, but you actually shouldn't be the equivalent of a bank. And maybe I'm reading too much in the rebranding, renaming, but I think it's grabbing back a bit of the sovereignty from the tech fins, let's call them this way. So the third one I'm personally excited about is Cambodia, where Soramitsu, which is a Japanese company that built Iroha, which is part of the Hyperledger Consortium, and they've built a digital currency for the National Bank of Cambodia that's live. It is a truly fascinating, I wouldn't say even experiment, for two reasons. One is the history, and the National Bank of Cambodia has suffered and fought a dual currency regime for the longest time. And the US dollar was much more broadly accepted until, let's say, 10, 15 years ago than the domestic currency. And they actually managed to stabilize the domestic currency and make it acceptable. And so now they can much more robustly manage the economy because they're actually in control. And so the system that they've built is something that also helps financial inclusion. So Cambodia has a mobile phone penetration. I checked it last year, so it's probably beyond that now. It's 150%, right? That means 3 phones for every 2 people, but only 30% of the people actually have a bank account. So there's like this inverse relationship. And when you get a wallet on your mobile phone, what it does, it also, you can select one of the participating banks, but as part of the process, it actually sets you up with a bank account. And so the central bank is not eliminating the banks out of the picture, which is exactly the same approach that China is taking, by the way, but they're part of the system, and it actually aims to create this inclusion where maybe we're not getting to a bank account penetration of 150%, but it will be, right, 70, 80% of the people will then actually have a bank account and can also take part of in the formal economy. So this is just cheering for the home team, and this company is doing interesting stuff also in Russian and Switzerland, security settlements, etc. So it's one to look out for, I think.
Thanks, Norbert. I think earlier we talked about what's the global approach, right, in terms of the CBDCs. If you look at trajectory here, 2017, not many central banks are engaged in terms of looking at CBDC. If you look at 2019, up to 80 central banks globally have now either in some form or shape, either considering doing a pilot, doing an RFQ, like Banque de France, they've already sent out a request for quotes for tech vendors to do certain trials. So they're already in that advanced mode as well. Similarly, if you look at the Federal Reserve Bank of Boston, as a result of the disclosure that they're working with MIT, they've just put out a specs out there to say that, look, we want to hire certain people. So jobs are being created on the back of CBDC's project globally as well. So, and if you look at the one in the middle, you have wholesale, general purpose, or hybrid, or both. In the sort of right-hand column, a lot of still in the areas of experiment, the proof of concept, but a number of central banks are already well advanced in at least doing an actual trial. So there are differences, in terms of proof of concepts. You can actually write a paper and do a paper proof of concepts. In my view, nothing beats the school of hard knocks, i.e. you need to actually test the pipes. You need to test whether the technology works, because it's one thing looking at, well, it works, but as we all know, especially those of you who are involved in projects and project management, you will find something new, right? You'll probably have, there are certain things you need to address, overcome, and come up with new measures to address it. And I think exactly that's what quite a few progressive central banks are doing. It's not just looking at a very limited environment, they're actually testing in a live environment. Like, for example, the Banque de France, they gave a webinar presentation where they are testing against existing rules, existing technology that exists, and they have actually issued a token that is live, kept in the balance sheet for a short while, and now obviously it's unwound to show that, one, it works in a controlled environment. And I think that's important, because until you reach that level of testing, you won't know what sort of glitches that you will face, right? So I have been involved in a few sandboxes as well. Some are internal sandboxes, some are regulatory sandboxes. I would say that the learnings in terms of the sandbox is not just tech, but it is also the ecosystem. Are we building ecosystem? And you need a network of players to get involved. Yeah. No, but thank you.
I need to see whether I can tease some knowledge out of you with Standard Chartered. So it's public knowledge that Standard Chartered has been part of the FCA sandbox in London with a digital currency. I don't think the FCA announcement tells a whole lot about what you're doing. I don't know, can you disclose anything even in a brief description, or is it off the record?
Yeah, I think I was part of that project. So the hypothesis that we did was to deal with a digital deposit, whether it constitute a bank product or it is constitute a security. One of the things when you actually construct certain things, especially when you look at the world, a number of you are obviously in your DeFi space, and a lot of the people who are work for financial institutions, they obviously work on the enterprise sort of blockchain and DLT space. The question that always comes to mind when you build something that has a combination of payments and combination of assets and combination of stuff is to look at what is it? Are we constructing a banking product or constructing something else? So as we all know, the world is shifting to such that there will be a convergence in terms of taxonomy. There is currently no globally defined taxonomy on what constitute crypto assets or digital assets, as called in some cases. And then you need to bucket them into payment tokens, utility tokens, and security tokens, right? Because it attracts a different regulatory regime. It attracts different treatment. And I think increasingly mainstream players are studying this area, looking at this. So in the context of what we were doing is to test the hypothesis of, isn't possible to come up with a banking product that behaves like a banking product, but have the features incorporating DLT. But obviously, as part of the learning, we have to look at issue relating to whether it constitutes a deposit protection scheme, because if you're going to be a deposit, it's not your traditional product. It must be able to sort of invoke. The other thing you look at is financial inclusion. Consumer protection is key. And also looking at disclosure. So how are you going to keep your product simple? Because if your product is targeted at retail, one of the lessons we learned at a high level is to look at, does your mom and pop understand the product, right? If it's cash, people understand it because you don't need to to educate people on how to use cash. But if you enable a product that is getting a bit complex for people to use or to understand, the question is, are we creating layers of complexity that doesn't exist? So the learning helps because it's about looking at who are we targeting, consumer protection issues, obviously data protection issues, and also onboarding requirements. As we all know, the world of onboarding requirements the bar has been raised. If you look back about 6-7 years ago, people can open a crypto account with sometimes very little information they have provided. You fast forward to the current world, a lot of the regulated crypto exchanges, digital exchanges, the KYC AML requirements has been raised. These days, it will take not just overnight, but it sometimes might take a while if you don't have all the information in place for them to do their due diligence for purpose of opening bank account. So no, but that's the sort of high level spiel I have.
Yeah. I mean, I think what just came to mind is like when we're talking and we've reviewed so many central bank papers, right? I think what I've been really missing is some coverage on the programmable aspects of digital money. And what I mean by this is that when we talk about cash or even, right, the form of electronic money that you have in your bank account today, it's really general purpose money. You can go out and use it for buying sneakers, buying food, buying drugs, paying your doctor, whatever else it could be. And for me, I see a huge opportunity, and that's maybe kind of in the social safety net, for example, to limit the use of money. So if you think about food stamps, for example, right? I mean, food stamps are in a way already programmed money because, well, maybe you can still trade them for drugs, but it's a bit harder already. It's 1 degree more. But if I gave you money to support you because you got many kids, or right, you had an injury, you can't work, and that money is not for general purposes, actually to feed you, to pay your rent, right, to pay for your kids' education, for example, and being able to program simple things as that into the money itself, I think the social benefits to it. But I'll take your point also, what you mentioned earlier, right? It obviously creates a level of complexity that we don't have today, and is it worth it? So there's a bit of kind of that economic trade-off and probably proper analysis that needs to be done, but just popped into my head.
Yeah, I think you're right. I think one of the attractions with obviously CBDCs that in some of the sort of test case we have seen is the concept of programmable money. Like for example, if as Japan, as you know, they've tried many methods to sort of boost the economy. Maybe 20 years ago, they probably have done a few initiatives where, apart from quantitative easing, they're probably placing monies with people, for them to spend, right? If you have a program of money that is in your wallet, but if you don't use it, it will be taken away from you or it will evaporate. That would incentivize people to spend as well. So in the past, when they did that with hard currencies, quite a number of people actually keep the money and save it, right? So I'm not trying to make a call whether it's good or bad. I'm just saying that the concept of program of money does give, hypothetically, central banks the option to drive certain outcome, all right, behavioral outcome. And from a macro level, because there's no live project right now to see the benefit of it, but conceptually, it could drive behavioral finance, or how people spend money.
And it's a fascinating example because it goes back like after the 1929 crash in Austria. There's a small village that tried to do this with paper money, and they actually did this successfully. So you actually had to spend your money. So your banknote was on the top of a sheet, and at the bottom were like 12 coupons, one per month, and you had to pay to get it stamped in the new month. And so you actually had to pay to hold the money. And if you use it and you spend it before that, then it's obviously no longer your money. You don't have to spend it. And the economy in that region did surprisingly well because people were not hoarding the money, they were actually spending it. That's why they had been given that in the first place. So doing something like this digitally, right, is a bright idea. And clearly, Japan, we all got the 100,000 yen, and I think we're in a lucky position. Well, I don't really feel I need it. And so we're going to do something socially good with that as well. But it would be much smarter if it had been based on need. And right, so rather than give everybody 100,000 yen, give people who really need it 300,000, give others 200,000, and then I'm fine with nothing, for example. And it actually, right, many people commented in this way, and the government said, well, this is right, a much higher administrative burden. We can't, if we do this, we can't do this in 3 months. It would take like a year and a half to do it, and then obviously it's too late as well. And so being able to do this all through digital wallets that are somewhat attached to your government, and where you have government numbers. You've got SingPass, right, in Singapore. You've got Aadhaar in India. We actually have my number in Japan that is completely underutilized. If you have these mechanisms, everything also in this distress situation would be much easier.
Yep, that's right. And I think just important also, this is just an overview, as I mentioned, where different central banks are obviously looking at sharing information, looking at use cases, and working with international standard setting bodies like Financial Stability Board, FSB, Bank of International Settlements, and Committee of Payments. So there's a lot of collaboration right now, rather than just going solos. Obviously, there are domestic agenda but there's a lot of cross-border agenda right now to create a framework for digital payments. Obviously among this, you look at how to improve the current payment rails. And in that context, also looking at the attraction of a cross-border CBDC use that is interoperable. So obviously the ideal utopia world is that in future, if you hold a digital yen in your e-wallet, right, and you've traveled to Europe, you're able to use it right away without going to a money changer, because your exchange is all done through you through smart contracts, and everything will be seamless, right? So there is some trial going on, but obviously it's one thing doing trial, because as you note, in our global payment system is built very much based on account-based sort of payment rails as opposed to token-based. So, unless there will be a huge revamp in the world of payment, it will be a while before we see that, but I think it's just a matter of time, given the direction of travel.
But then, so even in the international experiments, obviously MAS in Singapore did transactions with Canada, right? Canadian Central Bank, is it correct?
That's correct. I think they did the project Jasper and project Ubin. There are many phases to look at cross-border payments. They also look at using token-based payments and doing a couple of things that we explored. Obviously, atomic swap, where we swap one currency over the other, and how viable it is, and also creating an omnibus payment account where the central banks will settle among each other based on a batch basis. So obviously these are trial projects that conceptually works, but in doing in a scale that enable 24/7 faster, cheaper payment is a different scale completely.
Totally, yes.
Yeah. So I think that put a nice segue to, to talk about digital banks as well. No, but I don't know whether there's something you want to touch on, because CBDC.
Yeah, I mean, I think we're like 6:15. We knew we would talk a lot about this topic, so it's doesn't come unexpected. So maybe we'll leave the digital banks for the next time.
Sure.
Which probably easily we can talk another hour about it.
Yeah. So I think on CBDCs, part of IO School project is the Global Financial Innovation Network. So as you mentioned, a number of them are looking at innovation in this area in the context of how do we enable not just CBDCs, but for regulators to use technology to enable for them to facilitate a more efficient supervisory regime. So they are looking at obviously CBDCs and tools for them to support in the context of that regulatory technology and supervisory technology. So RegTech and SubTech, right? So I know that's not the topic today, but in the context of CBDCs, they're also very concerned about making sure that how do we ensure CBDCs land in the hands of people that have been white labeled as, appropriate persons to hold it, right? So there's a lot of stress and emphasis on onboarding. So these days, when you look at onboarding, and I think for those of you who are looking at the crypto world, you're familiar with Travel Rule 16, which obviously now have, since January, in a number of countries that have adopted the 5th MLD, which is the AML, Anti-Money Laundering Directive in Europe. The bar has been set that when you make payments through regulated exchanges, you need to disclose not just the details of senders, but also the beneficiaries, and the information is stored and is important. So in the context of CBDCs, one of the sort of, if we're using the token-based structure, one of the sort of consideration is data. How do you protect data privacy and personal data? So in Europe, you have your GDPR rules and regulations that enable personal data of certain clients, if they terminate any relationship with service provider, the right for erasure, right to be forgotten. So how do you enable that? I think that's important too, because how do you work in a tokenized world? Do you keep data off, certain personal data offline? Do you keep it online? But if you do online, how do you ensure that it's protected, it's not hacked? I think these are obviously live issues that people are grappling with, but it's not insurmountable. We have seen versions of at least in a crypto world where you look at, zero knowledge-based protocol. You use a combination of encryption to enable that. Obviously, it's a trade-off, right? If the more controls you have, it's about trade-off with scalability and speed, right? So it's about ensuring that how do we overcome that? Obviously, the bar in terms of enterprise exchanges is key in terms of if you want to enable a use cases of CBDCs, and also, as you mentioned, Norbert, about stable coins. So maybe I'll bring that two things together, because last week in the speech that Andrew Daly have highlighted, based on the citation that Norbert have mentioned earlier, is can you have a world where stable coins or crypto assets sit alongside central bank digital currencies or regulated token? So the answer that the governor of Bank of England have mentioned, obviously this is his personal view, is that he believes you could coexist. However, it doesn't mean that, in a context where the DeFi world touches on the more regulated space, for example, if you create a digital token that looks and behaves like a security token or a regulated token, then it will have to be regulated on a sort of a similar level playing field. So we do see that when it comes to KYC AML, if you're using crypto exchanges, regulated crypto exchanges to make transfers or payment, the bar is set that you'll be subject to the types of regulations that regulated entities are familiar with. Obviously, there's still a space, as you mentioned, with Zcash, Monero, privacy coins, where people are still, using it. But I do think that that's a very niche area. But if you're looking at the entire ecosystem where certain regulated exchanges now are enabling what we call interoperability or fungibility with certain cryptocurrencies, whether it's regulated or unregulated, they're going to make sure that it's seamless, right? You got to white label your clients to make sure that it is not one of the blacklisted entities. So to the point, there's a bit of a myth where people say that, look, if I put in a complete decentralized format, like for example, Bitcoin, it's, the regulators cannot touch me or cannot go after me. As you note, with the latest Twitter hack, there were three young individuals that thought that they could hack Twitter and then sort of perpetuate what we call a ransomware, where payments need to be made, or encourage payments to be made. They were caught within 2 weeks. Why? Because they left a paper trail. Because right now, with better analytics tools that don't exist a few years ago, you can actually go back in time and see where payment was made. So record on a decentralized format is immutable. You can trace it, right? You might not necessarily know from day one who owns the private address, but with better analytics tools right now that currently exist, the enforcement officers are able to track very quickly who actually owns it. And even if they can't track the identity, they are able to ensure that the regulated exchanges, once they're blacklisted, it's very hard for them to sort of extract and convert into fiat, right? In the context of Twitter, they wanted to move some of the sort of Bitcoin into Mixer to mix the identity, but even then they were not successful, right? So I'm not saying that, paint a picture that in a space where, the whole decentralized finance is now going to be open towards regulation. I'm not saying that, but I'm saying that in the context where you want to move back to the real world, whether it's fiat or regulated activity, the space in which the confluence in terms of regulations and where rubber hits the road is certainly an area that needs to be watched.
Thank you, John. We have a question. Yay! Thomas gets a prize for the first question. So the question is there a private or government technical central bank initiative to develop an open source kind of template guide, so a blueprint to confirm standards as they emerge and are adopted, etc., Yes, kind of. And I think it was quoted in Andrew Bailey's speech. I need to go back, and I'm happy to send it to you or send it to the group here. I think it came out of the CPMI. So let me get back to you, but that's kind of the roadmap and fundamental models that are out there from a central bank perspective. I mean, if you just say I want to launch my own digital currency, given that most of them are open source, right? It's a matter of going to GitHub, and I think even the Circle One USDC is out there, and you can basically take a look at the code and how they've done it. And if you wanted to clone it, you could actually clone it. So that's would be my answer. John, do you have any?
Yeah, I think with all these open source GitHub, you can clone it. But the difference is this, right? Cloning is one thing. Operating it requires licensing, right? If you look at the likes of the stablecoin context, right? The privately issued type of asset-backed token that is backed by fiat in the context of, let's use USDC, Paxos. The concept is very similar, but they're all subject to regulations, right? So if, for example, to the extent that they're operating out of US or New York State, they need a BIT license, right? And in the context of US, you need to ring fence the money with a third-party custodian, because in order to make sure that the asset-backed token or the stable coin is actually backed by actual fiat. So the point I made is, yes, technology-wise, a lot of these are open source code, but the difference is when you want to operate them, you're subject to regulations, which they are in markets they're targeting retail. So I would say that the space in terms of, if you look at the number of jurisdictions, some of them are still able to operate on an unregulated basis. But as you have institutional players looking into areas of interest, like, obviously, if you look at Fidelity, they've done a survey that among their institutional investors, there is an increased interest to actually dabble in or look into a unregulated sort of crypto assets as a class of investment, right? So what does it mean? It means that while there are keen interests, there are also people wanted to make sure that how are they regulated, and will their crypto assets that they held be held to standards that give them added protection. So then they will look at institutional custodians, looking at, there's also an increased new market model in terms of insurance. So traditionally, if you look at 6-7 years ago, it's very hard to get insurance for certain of these crypto activities. Fast forward to now, provided that you're able to meet certain standards from your cybersecurity, your resilience, there are certain insurance or reinsurers that are now quite open towards providing certain aspect of insurance coverage as well. So it shows the level of maturity that it is slowly evolving in this space. Obviously, it's still a long way, but we've gone past the stage where you have a completely decentralized world, and now with increasing mainstream players, we do see certain activities that we're used to in institutions that are being applied in terms of best practice, best standards. But all it does is just raise the bar, right? It raise the bar in terms of best practice, raise the bar in terms of looking at what concerns about cyber risk, cyber attacks. And then I think what that means is, if we reach an inflection point that this turns mainstream in terms of, we talked about CBDC earlier, we talk about regulated stablecoin, which the Bank of England have sort of set up very clear guidance. And provided those requirements are met, then the regulators may be comfortable towards allowing some of these to operate in their jurisdiction. So there's a Q&A as well. Was it one?
Yeah, I pulled out the CPMI link, so I answered Thomas' question.
Sure.
Anybody else have a question?
Yeah.
For more? No. Oh.
Yeah, Chuan. Yep. Thanks, Chuan, for your feedback. How do you think they can move? So I think there's a question raised from Chuan that You've seen many CBDC projects, and how do they move out of a sandbox to actual production? I think this goes back to the topic we talked about, and I think just to quote, I think I was attending one of those webinars where one of the central bankers said, at some point, there's so much you can do in sandboxes, right? I think that the key then is to actually have a few ecosystem players, whether another central banks with market participants, the fintech firms, the startups, the banks, plus a number of players to actually do a actual case. Because as we all know, it started with one, and then it creates its own sort of momentum. As you note, when we look at the first Bitcoin ever after the Satoshi's paper, it was just one or two couple of trades, and then gains momentum. I think it's the same thing, right? So I think beyond just doing POC, at some point when parties in the ecosystem feels comfortable enough to say, look, let's do a live deal, that's when people get a bit of comfort that, look, we need to move beyond just POCs. Now, POC is important because before you know how to run, using the quote from Andrew Bailey, you need to learn how to walk. Fair enough. But if you learn how to walk, at some point, you should be comfortable to start thinking about how do you run, right? So I think with a couple of, at least this year, with a number of trials that we're aware of, people are testing the hypothesis, I think it's to start looking at baby steps. What was the first step in CBDCs? Do we go with wholesale, which is a much contained environment because you deal with institutional players? We're looking at certain sort of use cases, or do you want to deal with retail? So if you deal with retail, there's a sort of a design choices. You go via complete revamp tokenized environment, or you start off with incremental steps, account-based, existing payment rails, moving on to tokenized platform. So I think these are sort of trade-off questions that need to be asked. Yeah, thanks, Sean. It's a good question.
And I think, right, if you look at where the different central banks are, although the Chinese have no official documentation out there, the comments from the governor, I think in May, it was that, right, these things are going on, the experiments are on with the 4 cities, with now is expanded, as John said. There are 4 banks and the 3 telecom companies involved, and we'll see how it goes, but we think that maybe towards the 2022 Olympic Games, Winter Games, which would be in Beijing, right, we can actually apply something like this. And it seems, let's say, rather conservative. Obviously, the Olympics would be a great showcase for that, but I also wouldn't be surprised at all, especially in the Greater Bay Area, which has, for political reason, also much greater significance now, that they're pushing these things out earlier. And I think it comes back to some of my earlier geopolitics comments that, right, first to market, I think, will focus everybody else's attention, and maybe then the Japanese, the Europeans, the Americans are putting a few more resources behind this in more sense of urgency. From an implementation perspective, and I am a techie, I think if you do this at the national level, this is not something where you say move fast and break it, like the good old Facebook slogan. Right, you can do this with the DeFi protocols that are out there, which are largely experiments and like small teams doing stuff. And if some people lose a few $1,000s, bad for them, but we've all learned some lessons. And I don't know if you follow this stuff, but Sushi Swap over the last 2 weeks was a copy of Uniswap Exchange and had some modifications. And the guy basically took now all the sushi and exited. He says he's still going to maintain the technology and develop it further. But in the interim, he's made off with, I don't know how much money. And I think people accept it simply because it's an exciting space, right? We're living at an age where, and I don't think that is something that the regulators have understood yet. We're living in an age where innovation doesn't happen only at the center anymore, right? Innovation happens at the edge, and if you have a Wi-Fi connection and a PC, you can, right, innovate and come up with the best digital currency. And so we're all cheering for Thomas, you asked the earlier question, but you don't need much in terms of infrastructure or investment. So go out and create something that is exciting, fulfills some needs, and let the market decide. You can't quite do this when you're the national central bank. So it needs a bit more care and testing and piloting to do that, even within the country. And then if you think you do this internationally, even much more so. So I think we're appreciating everybody sticking around so long. This was about half of what we had prepared, quite honestly. It's probably as much once more on digital banks, and we could talk about that forever. So if you like this and you'd like to join us again, maybe we'll do then digital banks next time. For me, John, I thoroughly enjoyed it. I enjoyed the prep. Always good to work with real pros. We should not admit that we didn't rehearse this, so this was a bit kind of off the cuff. But as I said, this was very enjoyable. As always, enjoy talking to you and learning from you. And
no, likewise, I think it's a learning session. I think quite a number of you who stayed back, I appreciate that. We all are in this space together, and I said there's a lot happening. There's still a lot we don't know, but I think it's important to make sure that we sort of keep each other abreast, because all I can say is that this space is evolving very rapidly now, given that digital transformation, digital currencies, CBDCs form part of a G20 priorities. So imagine you do that. G20 priorities are a group of economies of all the top nations. So if they put that as top agenda, that will mean one thing, there's a lot of focus. Two, there's a lot of collaboration. And thirdly, with COVID, and unless they're able to find a vaccine very quickly, the adoption towards or trend towards digitization and adoption of digital currencies, whether it's CBDCs or regulated types of tokens or some of these sort of unregulated payment tokens, is here to stay. Question where the regulators have in mind is balancing trade-off between innovation as well as consumer protection, and making sure that we have a level playing field for all market players, i.e. same set of rules, same set of regulations, and we don't create what we call regulatory arbitrage. That's obviously the wish list.
Wonderful. Nothing else to add from our side. You know where to find us if you have questions in the interim. Feel free, if we're not connected, I think most people I see are probably connected on LinkedIn. Reach out to us. I think you noticed we like talking about this stuff, and we'll continue to do so. So thanks again for joining. Thanks, John, for great cooperation, and then see you next time again.
Welcome. Thanks for having me. Thanks, Norbert. Thanks, everyone. Stay back. Okay, have a good day.